All right, first up, let's talk about the big tech earnings in India. It's really curtains down for the big tech numbers coming through for the second quarter. And it's turned out to be a pretty mixed set. If you look at these individual numbers, the bottom line is consistent. But the question is the worst finally over for the Indian tech sector? All the big tech giants, TCS, Infosys, HCL Tech, Wipro, they've confirmed that they are seeing a pickup in demand, especially in the crucial BFSI segment. But the tech giants have underscored the need to remain cautious given the signs of weakness in Europe and also the auto sector overall. So what does the future hold for the sector? Is this the right time to go bullish on the IT pack? We're going to discuss this with Sandip Agarwal, who's the fund manager at Sowilo Investment Managers, and he's joining us in a moment. But before we go to him, let's just hear out what the top managements of IT companies have been saying. And even before that, my colleague Anisha, who tracks the IT sector, is joining us to give us a sense of the tech earnings that have been reported. Anisha, you track the IT universe very closely. Now that we're digesting all the numbers for the second quarter, what's the overall picture emerging? Is the recovery well and truly underway?
Well, yes. Hi. It does look like that recovery is underway. However, having said that, the companies are not willing to call it a clear bottom. They're all saying there is an improvement in demand environment, but they're very watchful of the risks which are there on the horizon, namely the geopolitics, and that is something that they're watching out for. Having said that, there is a definite pickup in execution because across the board this quarter there has been a positive growth figure. Last quarter we had seen a bit of a mixed number coming in there. A couple of companies had reported a decline. Right now, there's a swift improvement as far as execution is concerned. Discretionary demand is picking up. BFSI has bottomed out. That's the clear verdict everybody is talking about. But on the flip side, the auto sector headlines from Europe aren't very encouraging, and everybody is talking about weakness in Europe. And it's expected it's going to get protracted a bit. Gen AI, which was, of course, only proof of concept earlier, is turning into an actual revenue as well. Margins have been a bit mixed this quarter, but headcount addition has been good. And overall, the deal win pipeline has been also steady. So safe to assume from the stock market point of view that we can perhaps call it the bottom, and we have seen the reaction come in for the likes of HCL Tech, etc. Let's see where we go from here on. But yes, at least an improvement, though Q3 is seasonally weak. So there might be one more quarter of softness. But overall, there is an improvement definitely in the momentum for the IT sector. Back to you.
Anisha, thanks very much. The typical phrase that is used for a situation like this is cautious optimism. Let's find out if Sandip Agarwal is going with that or not. He's fund manager at Sowilo Investment Managers. Good to have you with us, Sandip. You know, from these Q2 earnings and everything that my colleague is saying, with the likes of Infosys, Wipro, TCS and HCL Tech reporting numbers, how do you see this possibility of a gradual recovery? Is that going to take some more time, you think? There is some softness before it actually comes through, or is it really here?
Hi, good evening, and thanks for having me on the show, Vikram. So, yes, I think it has been quite well summed up, but let me put this into a perspective. See, you have to remember that barring Wipro, the best part of the year is gone by now, because, you know, third and fourth quarter have their seasonal challenges. So this year is gone from the perspective of sequential revenue growth or some positive surprise. Year-over-year growth could be better. So everything is now FY26. So from that perspective, I think while, and I have been reiterating this in every discussion we had earlier also, that things will improve in terms of revenue growth and margins substantially from here on. But also remember that market is very forward-looking, and they have all these IT stocks. If you see in last 6 months, they have given phenomenal returns. Tech Mahindra, Infosys, all are up 40% in last 6 to 8 months. So I think, you know, large part of all positive news has been discounted, and the stocks are trading at a very, very decent valuation, I would put in that way.
Yes, and that's what I wanted to ask you, that the index has run up 35%, even though the clarity or the path for recovery for the sector was not seen as clearly. Without that much visibility, how have we seen so much of a run-up, and are valuations supporting this right now?
So, you know, same thing happened in NASDAQ last year. If you see, it made a bottom when numbers were good, and then it started recovering when the numbers started coming bad. So people always trend to time it. And from timing perspective, I think all the good numbers which will come in future from here on also has been discounted by the market already. So I will put it this way, that we will have good fundamentals going ahead, but everything is discounted, so stock may not react in the same way. That is the way I look at the sector. Barring ER&D, which is a very different structural story for a decade or two.
Yes.
And there, people are willing to pay much substantial valuations and are willing to take longer term bet.
But you're saying the fundamentals look good. But if I see the revenue growth slow down for some of these IT firms, it's really looking anywhere between moderate. Some would even classify it as slow. Is it because demand from key markets like US and Europe is just not robust enough, or are you spotting some other factors that are at play?
No, so what happens is actually we have two, three challenges. One, there is a US election which is coming up. So obviously, most of the companies, most of the clients, they want to save money for future. They don't want to just commit whatever is postponable. So that is a very common, typical phenomena which we see every 4 years when there is an election in US. Second, I think, there has been an indirect impact of all this crisis which has been happening in Middle East. If not directly, indirectly, we have seen EPAM a big sufferer of that. Number three, in my view, whenever there is uncertainty on the economy in US, then people, most of the clients always try to, save money for future. They don't want to commit money immediately. Whatever is possible to postpone, they postpone. So we have all three things coming together. But otherwise, you see this attrition which has come down to 12.5, 12.7% for large players would not have come down to that level. And this coming down means that margins will improve substantially from here. So you may see EPS upgrade in next 2-3 quarters, but I think, all those is discounted in the numbers.
But what about the deal wins? Are they also looking positive? TCS has reported deals worth $11.2 billion. Infosys, I was looking, they're reporting deals worth $7.7 billion. But of course, a lot depends on what kind of projects are coming through, whether they are high value deals or not, how many of them are in the new growth areas like cloud and analytics and generative AI.
No, so quality of deal obviously matters, but I think, in the new technology, while it sounds very fascinating and everyone wants to do business in those, but remember, not necessarily you make more money there, because you always make more money in things which you have been doing for last 10, 20, 30 years, because you have mastered the skill there, and the prices of those skill sets have bottomed, and you have improved tremendously on your tools and automation. So you make a lot of more money there. So in fact, while investors feel very happy and analysts feel very happy when deals come from the new technology area, but trust me, I have run a tech company for quite some time, and I can tell you with my personal experience that in new technology, it is not necessary that you make more money. In fact, most of the times you basically, you make less money than the traditional deals.
Is it going to be about cost optimization? A lot of these projects, since you've worked in the tech sector, where is the actual traditional business coming through? Because BFSI has actually done it for the IT sector. Is that the sector? And are those the kind of projects, these cost optimization projects, that will really help the recovery process?
I think, BFSI recovery is a very, very good sign, because, a lot of revenue are still dependent. 34% of Indian tech revenue come from that sector. So while people may be pulling out some negatives in each result, like TCS, there was a shade of negative in North America not doing well, and also most of the beat coming in from India, which is not seen positive. But at the same time, BFSI has done well for them. Similarly, in case of Infosys, BFSI has done well, while retail has been slightly weak. So I think we should be very we should feel good that BFSI is recovering, and BFSI recovery can have it. It has the ability to pull up the whole sector in terms of growth. But how much it can pull up and how much of it is discounted in the stock, that is something which we need to be very cautious about it.
Well, how cautious is the management? We've had a word with some of them. And this is the kind of picture that's emerging, especially when you talk about the pressures on margins, whether we're looking at BFSI and the kind of revival that we are talking about. Is it actually happening? Here's the management of several of these companies who've been speaking about the numbers. Here they are.
Both North America and Europe, we see good, UK, we see good growth in banking. And capital markets has been weak. insurance has grown, and regulations and risk and compliance has also grown in banking. Europe, it's more or less very similar trend. UK, again the capital markets has been a problem, but also good thing is banking is coming up, insurance is coming up. So, which we hope will sustain in the coming quarters.
We see financial services, the discretionary spend is looking stable, strong, especially as we highlighted in capital markets, cards and payments. We also shared that in automotive we see slowness in Europe. In the other verticals, the the discussions with clients are similar, so we don't see any change.
Despite softness in revenue in Q3, we are confident of maintaining our margin in a narrow band.
If it's consulting-led, Capco-led, it must be discretionary spend. So in the BFSI segment, to some extent, we are seeing that aspect coming back. But I'm not seeing that kind of a change in other sectors at this point in time. So clearly, in the US and also across globe for us in the BFSI segment, to some extent, consulting-led discretionary spend is actually helping.
So they are talking about the turnaround stories, and a lot of it is concentrated in the BFSI segment. But we got in a word from Infosys about margins, and you were alluding to that as well, Sandip. How much pressure on profit margins are you seeing in these IT firms because of wage hikes and also these pricing challenges in the contracts that they are signing?
So, this quarter, generally, most of the companies have now, even the large ones, they used to earlier give wage hike in one shot in the first quarter. But in last few years, they have all made it a practice that they want to spread it out. So from that perspective, some portion of the hikes come in first quarter, some in second and some in third. I think, wage is not that big a challenge. The challenge always, you will see that when margins collapse, it is always because of very high attrition. Because remember, high attrition kills margin very quickly because you have to spend a lot of money in training the new resource. You have to replace them. There is a cost to that. You have to, train them. You have to pay them higher salary than the earlier one. So always attrition is a bigger challenge. But fortunately, and that is the reason you will see that in last year, in the beginning, most of the stocks collapsed when margin started coming down due to high attrition. Now this situation has reversed. Attrition is now coming down to 12-13% for the large players, which is a very, very healthy sign, I would say. And margins should definitely improve from here. So I honestly don't see any sign of risk on margins, particularly from the cost side. But yes, pricing, if it falls, but pricing has very limited room to fall because where it can fall, those segments are already saturated.
Right.
So I honestly don't see risk on the margins. I believe that margins will give positive surprise, and that's the reason I'm saying you will see EPS upgrades. I also don't see risk to revenue growth, but I definitely see risk to further re-rating.
You mentioned attrition, and I'm very interested because there would be many of your viewers who are keen on jobs in the IT sector. How is the slowdown in the IT sector when it comes to hiring panning out? Infosys has reported a net reduction in headcount for the second quarter, and it's the second quarter in a row. Even TCS and Wipro seem to be on that same path. But tell us how you're seeing hiring pan out.
No, so this is a very difficult thing for even IT companies to manage, despite they having all Six Sigma process in place, because you can predict the hiring, but you cannot predict the attrition, and because of that, this kind of mismatch and negative numbers keeps on coming. So I think right now, if you see the bench strengths are at low level, the bench is low. So I think now hiring will also pick up, and you will see some signs of that from next quarter. From basically in the current quarter, you will see a good hiring pickup. That is what my sense is, because everyone is at a very low attrition number and the utilization numbers are quite decent. So which implies that bench is quite low, and so I think there will be a good pickup in hiring from this quarter.
Well, that would sound reassuring to those aspiring. But Sandip Agarwal, with your background in the IT sector, this really helps putting things in perspective. The kind of numbers that we've seen for the second quarter from the big tech companies here in India and their aspirations for growth. We'll keep watching that and keep connecting with you. But thanks very much for joining us with your inputs on this.
Thank you. Thank you.
Meanwhile, we're...
If you like this video, then like, share and subscribe to ET Now.